Okay. Hello, everybody. Good to have you back. Good for another class. Did everyone have an opportunity to read the book? Please say yes. Oh, good. All right. Because, we're still on the introductory, as they call it, the honeymoon phase. Things are still nice and clear, and things are going to get a little bit more complicated as we go along, but hopefully we'll try to keep them as simple as we can. So what's our agenda today? Our agenda today is a couple of things we want to keep in mind as we go along. The first piece is, I introduced to you the various funds and fund types. We'll go into more detail today as to what those are. And we talked about governmental funds and business, proprietary funds and fiduciary funds. So we talked briefly about what the activities are within that. We'll discuss that a little bit more. And then finally, we'll have our first introduction to governmental financial statements. Now, if you've seen those in the back, I'm sure you were delighted to see them, because when someone looks at it for the first time, they have no clue as to what's going on. And if you felt that way, that's okay, because that's what we want to learn about today. So we'll take a look at the governmental-wide financial statements as well as the fund financial statements, and you should know the difference by now. And we'll talk a little bit more about funds and how they're set up and what a major fund is and what is not a major fund. And we'll go through all of this today, but this chapter is still pretty light. So if I don't go into all the details, don't get upset about it, because what this is, for instance, each one of the items we deal with is a lecture by itself. So we're not going to go into a lot of detail. Okay? So, and if you are reading the text and you see something that I didn't go over in the class, for instance, the text talks about deferred inflows and outflows. There's a reason why I don't want to talk about that. Okay? And I'll explain to you what the reasons are, because when you read the textbook, it's hard for someone who doesn't know this field to know what's important from what's not that important. Everything is important, but there are things which you see many, many times. There are things that you see only once in a while. So we want to concentrate on the more important things. Thank you for those of you who put nice name tags. That's very helpful. Helpful for me. So let's jump right into it. This is more of a review. Economic resources. We talked about basis of accounting and measurement focus. Remember, for each one of these, we talked about measurement basis, measurement focus, and basis of accounting. So tell me, what is basis of accounting? I keep on talking about this term. Anyone tell me what it means? Yeah, accrual basis of accounting and modified accrual. What does that mean? Well, you know what it means? It means, how do you record transactions, right? You need to know when to record transactions. And that's what it's all about, the basis of accounting, isn't it? So keep that in mind. But here we're talking about the two measurement focus. The first one being the economic resource model, and the second one being the financial resources model. And by now you should know what each one is, because this is basically a review. At this point, the economic resource model is what is used by companies, by for-profit businesses, right? It talks about operational accountability. You recognize things like depreciation. You try to find out what things really cost you, as opposed to what the other one, which is the financial resource model, which is a more short-term focus, which really deals with the flow of financial resources. Resources going out and resources coming in. And that's the principal focus of it. Why? Because it's driven by the budget. And the budget deals with real things, such as resources being received and resources going out. And that's what fiscal accountability is. So this is like the pillar of governmental accounting, and you should know what this is, what these two are. Now, there's a reason why you want to know what these are. The reason is that there is a separate set of financial statements prepared for one, and a separate set of financial statements prepared for the second. Okay? These look more like a business, and these look like the traditional government statement. That's the reason we make the distinction. Two sets of statements. One set of statement here and one set of statement here. And in order to understand what the differences are, we reconcile them through a reconciliation statement. Just get that, and that's how we'll start off. So basis of accounting, I talked about that a little bit. And by now you should know what the accrual basis of accounting is, and you do know that already, but what the modified accrual basis of accounting is. Now, in the next chapter, we'll go into detail as to each item of revenue and expenditure that's found in a government general ledger and decide on or talk about when it's recognized and when it's not. Okay? But for the time being, you should know what modified means and what the full accrual basis is. Any questions so far? All right, and I think you're familiar also with the activities of the government itself. And so let me just ask you first, and we talk about it. What are the typical governmental activities? What do governments do? Oh, I know, but what services do they provide? Yes. You know what? You answered the question, which is a very honest answer. Too honest. Yes, go ahead. Yes, maintain highways, streets. What else? Education, public safety, right? Police, fire, all these kinds of administrative functions and police functions. So those are called governmental activities. Okay. The next type, business type activities. What are those? I was looking. No, business type of activity are things which government does where it expects to be fully compensated for. Go ahead. Well, buy and sell land, but still activity, meaning something it does, functions that it. Transportation, but let's think about transportation. Well, New Hampshire. No, not kidding. Not kidding. If you go on the New Hampshire Turnpike, I think, I'm not sure, but in New Hampshire is one of the few states where only the state can sell alcohol, and nobody else can. So, but by this I mean really business type of activities are activities such as, running a municipal golf course, for instance. Some municipalities have airports that they run. Towns have, what other types of things? Water authorities, yeah. Yes, municipal pool is good, but it has to be a really large pool here to run it as a business. But hospitals, some communities have hospitals. So that's the business type of activity. Electric, gas utilities, others like that. What's the difference? The difference is that when governments run those operations, they want to cover fully their costs of running. So if you're a client or a customer, you have to pay for it. You don't get a break. You pay for the cost of operating that. Right? So that's the difference between one part. When you call a cop to your house, you don't write a check out for that cop. Of course, you pay for property taxes. But if you go play a round of golf at the municipal golf course, what do you have to do? You have to pay for it. Or if you consume electricity from a municipal system itself. And finally, the fiduciary activity. Now, we talked about this. What are these types of activities? Fiduciary are basically, but what does it mean to be a fiduciary? Means you gave me the ultimate answer, which is pension, but you're holding money, what? Yes, yes. Being care of assets which are not yours, are not yours. In this case, government holding assets for someone else's benefit. So he said pension. Yes, state of New Jersey has a pension fund which it manages for others, which are its employees. Okay, so it acts in a fiduciary capacity. Okay, so so you get those three, right? Okay. Now let's take a look at the financial statement. So there are two sets of quote-unquote basic financial statements that are required. And what we're going to do is we're going to go through them, and it's going to be difficult. You're not going to understand everything you see in there. So don't get nervous. But what I'm going to do is I'm going to give you a very top level. Remember, this is only the second class. Okay? As to how, and just pay attention to that. Don't get into the details of it, because you're not going to understand those right now. You will, but not right now. Okay? So we're going to look at two sets of financial statements. We'll look at the government-wide statement and the fund financial statements. Remember the two bases of accounting, right? Operational accountability and the economic resource, as opposed to fiscal accountability, right? And flow of financial resources, two sets of statements. And so what I've tried to do was, I see everyone has a book, but what I'm going to try to do is I do have access to the electronic textbook. And I'm going to go to try and see if I can pull those statements on the screen, which I think will be easier. Okay? So we'll go take a look at the first one, which is on page 39, for those of you who have a book. Okay? Okay. Now, okay. A couple of things first, which I'd like you to notice, okay? And I'll stand here. And you don't see all the entire statement here. First of all, the title, Statement of Net Assets. Now, these are very minor things, but these are minor things, but they're important. Some of you asked me whether you could get the old book. Last year, there was a new standard put forth which did a couple of things, some minor and some major. And one of the things was that it changed the title of the statement from Statement of Net Assets to Statement of Net Position. Okay? So if you see that as you're looking at it, don't get confused. It's the same thing for our purposes, but if you see a different title, don't be concerned about it. Okay. So this is for the city of Jacksonville, Florida. Governmental activities. Everyone know what this contains, right? Now, we know that, right? Everybody know what business type activities are? So obviously your next question is, what's within this? And what's within this, right? Now, some of you might say, what is this component unit? For the time being, I won't spend too much time. Component units are organizations which are owned by New Jersey, for instance, but which are independent, such as the New Jersey Sports Complex, such as the New Jersey Turnpike, such as the New Jersey, North Jersey Water Authority. These are major agencies, Atlantic City Casino and Redevelopment Authority. These are component units of the state of New Jersey. So you might say, why include the component units? Well, if you were a rating agency and you wanted to look at New Jersey as a whole, you just don't want to look at operations run by the state of New Jersey. You also want to look at all the operations run by independent authorities of the state of New Jersey to get a complete picture. Okay? So we will not talk about this too much, but that's what that component unit is. Notice that this didn't come here. It's what? separate. So obviously your question is going to be, what's in here, and what's in here? How many authorities and agencies are here? Okay. Notice the other thing on a comparative basis, 2009 and 2010. Okay. So you get the format, right? What's not here that we just talked about? Yeah. Why? They don't belong to us. The pension funds belong to what? Employees. The state manages them, right? I'm making it simple, but that's what that is, right? They get a management fee, but it's not their asset. Exactly. So let's go down a little bit. I want you to again take a look at how it's displayed. First of all, see the capital assets, just like you would have in a for-profit, because these are what? Government-wide statements, right? Liabilities, non-current liabilities, we understand this, and then we come to net assets. Unlike the stockholders' equity section of a balance sheet, this looks a little different, doesn't it? Because look at it. So this government has 859,000. We'll just keep it simple, number. Why? And these are the components, and we'll study this. As I said, I don't want to go too much into this, but there is a concern here, which is what? For this fund, for the governmental activities, what is it? A negative what? 207, right? Right. So there is that, and we'll talk about how that is. So these are, as I said to you, we don't have stockholders' equity or anything. We do. So this is our net position, right? 859 in this case, and net position in this case is what? 150. This is based on full accrual basis, because this is what? Governmental wide statement, right? Just like as a business would look at. And then when you consolidate it all together, this is their position. Okay, so this is the balance sheet which looks most like a company's balance sheet, a for-profit balance sheet. Though it doesn't, but it follows the same basis. Okay? So let's go to the next one. And again, as I said, don't be concerned about the individual items. We'll deal with them. Okay. Now comes a statement which really confuses people a lot. And I hate to say this, but it is a very confusing statement. You don't understand it at first blush, don't think there's anything wrong, because it is a very difficult statement to actually, it's not intuitive. Because there's so much information crammed into the statement that you need to just kind of dissect the statement and figure it out. So let's do first thing. First is, and I don't know if you can see this, statement of activity, not income statement. What is it called? Statement of activity. Okay, see the different titles? Okay, because these are the activities of the government, right? Okay. So what are the activities of the government? General government, human services, public safety, culture and recreation, so on and so forth. By the way, a separate line, interest on long-term debt. This is of what? These are the governmental activities, right? And these are what? The business activities, right? Got it, right? Everybody together with me. Now, for the time being, don't think about the component units. Just put that aside for the time being. These are all the others, okay? All right? And notice one thing, for those of you who quickly see the math. See all the work being done here is just put on the side. It doesn't come in anywhere here, right? The totals don't go anywhere here, right? They just are put on the side, right? So it's informational purpose only, okay? So let's take a look at the format. The first thing you'll notice is, unlike a income statement, it's revenue minus expenses, right? Notice the format. First of all, it doesn't go this way. It goes what? This way. So it's expenses first. Notice that? Not revenue, but what? Expenses, okay? Then you get what? The program revenue. And this is the net, right? So what you have is, so for instance, in public safety, their expense was 500 and some odd thousand. their fines and charges and whatever are 46. They got some grants from government. They got some capital contribution. Okay? And this is what they're left with. Notice the negative sign, which means what? Money making or money losing proposition? Money losing. Right? But that's the way it's supposed to be. So you say, but how could it be all money losing proposition? Because wait till we get to the second slide. Is everybody with me here? Right? Okay. Now let's go to the business activity. For the time being, and this is not, I don't want you to get confused with the word fine. This probably contains just a very small portion of fine. Most of it is charges for services. Okay? So don't get confused. You might say, gee, what are these guys? They're levying fines on everybody? No. Would it be better if they separated them? It would have been nicer, right? But they could put them together. But that's what because you're not going to levy fines on these activities, right? So it's charges for services. You see that? Right? Even here, see this? The difference between expenses and revenues equal what? The net for business activities, right? Got it? Okay, who didn't get it? Did somebody say no? Okay. All right. So far so good. We are good. We've kept this separate and we've kept this separate. Now comes the next part, and this is where things, I want you to just pay attention to it for a little bit more carefully. General revenue. Notice what kind of things they put in general revenue. Property taxes. Notice they didn't take property taxes and allocate them among the activities. They didn't do that. What did they do? They put it under general revenue. We have things like utility services, intergovernmental, and we'll go through all this. My point here is that the most important thing is property taxes are general revenue. So the bottom line is, unless you have a revenue source which can be specifically identified through an activity, if it's not, it becomes general revenue. And you know what? Think about it. What difference does it make if it's here or it's here? The bottom line is going to be the same, right? But GASB was very careful by doing this because they said, we want to know what it costs on a net basis for each one of these functions. And then we'll take this into account. So what did they, after all that was, by the way, there's one little line that says transfer, and you can read what happened here, right? There was a transfer from one to the other, right? Okay. So this is the change in net asset. Okay, so after you take your revenues, after you subtract your expenses from your revenues, or revenues from your expenses, this is the net of, for governmental activities, 145, and for the business side, 5,000. This is how we look at it. Did you get this? Good. Because as I said, this is a little confusing, but now what we're going to do is we're going to go in and take a look at the next set of statements, which is, okay, I guess this just kind of, talks about what I just said, but there's one little item which I'm going to come back to, which is the internal service fund. So remind me if I forget, because there's something that happens with this internal service fund. And I'm not going to go into this because I'm going to talk about the fund itself. Okay? And you see fiduciary funds are not reported in the governmental-wide financial statements. Why? Because they don't belong to us, right? Okay. Now we go into the fund financial statement. Okay? So from government-wide, now comes that funny basis of accounting, right? And we're going to take a look at that. Okay? So the first thing we're going to take a look at is the governmental balance sheet. which is on page 41. Yeah. Okay. Now, again, I know you, I don't know if you can read this. First of all, okay, notice the title. Balance sheet, governmental funds. No governmental activities, governmental funds. Not statement of net assets, balance sheet, governmental funds. Okay? Okay, so now you look at this. You look at the assets. What happened to the capital assets? You don't see them. They were there before in the other statement. Remember the focus? No capital assets. You go down further. As we go down, no long-term liabilities. And somebody might say, wait a minute, there's something called bonds payable. Isn't that a long-term liability? No, it's the short-term portion of the long-term debt which is due. And that's what that is there. And we'll talk about that later. But notice the absence of long-term assets and long-term liabilities. Okay? Next thing that you see, general funds. Right? General fund is like the operating fund for a government. You'll always have it. In a governmental balance sheet, you'll never, ever not have the governmental fund. So this is your current fund, whatever that is. Now, what are these? Special bonded debt obligations, general projects, non-major governmental funds. And that's what we're going to learn today about. Don't be concerned about the heading. What I want you to do is think about this. General funds, fund number 1, fund number 2, fund number 3, fund number 4, and then the total. And that's what we'll talk about. So it looks like we have columns for each fund. And then what do? We aggregate them. So the question is, how do you decide which fund to put this in? Because this looks like non-major governmental funds. Doesn't that tell you something? If it's something, if you put everything here, if you put things into the non-major governmental fund, what are these? Major, right? So that leads to the next clue here. All major funds have to be recorded in their own separate columns, right? All right. Now, I tell you that with a little caution. Some governments may decide that it's best accounting practice to show a fund, even if it's not a major fund. And GASB permits that. GASB says you should show the minimum number of, use the minimum number of funds. Don't go crazy. But the government has the latitude to show a fund if they want. In some cases, if a government borrows money, those who are lending the money to the government might require a separate fund to be set aside, as we can see in these two cases, the creditors. So just for the time being, just take a look at that, and then we'll go into more detail. Next thing, the other statement had net assets. Here, what do we have? Fund balance. Remember the other had assets, liabilities, and net assets? Now what do we have? Fund balance. Now, this is the next thing which I want you to keep in mind. When you look at financial statements, for instance, for the state of New Jersey or some other entity, they might not have these categories, a different category. Why? Because we're going through a transition. Remember that statement number 54 I was telling you about last year? It's changed the title of it, and I'll talk about what these mean. Okay? But for the time being, these are some of the changes that have occurred. Okay? So total fund balance is like the fund equity, right? That's what that was. Now, for those of you who have your book in front, can you go into the statement of net assets and tell me what this number is? The total net asset for the governmental activity. Tell me what that is. I mean without the proprietary fund, just the governmental activity. Is it $1.9 million? Okay, good. So what you notice is that these two numbers don't match, right? And that causes an issue, because when you look at this, it's actually, yeah, it's 859. Yeah, it's 859. Yeah, no, that's all right. No, it's 859 because it includes the business type activity. The $1.9 million includes the business type activity. Yeah. Okay. So we got for. Do you see that? Okay. So for the time being, those who don't have the books, just believe us that this number, net asset number, is 859. In the other, got two numbers. Two bases, two numbers. So what's the next logical question? How do we reconcile it? Okay, so let's take a look at the reconciliation as to how we do that. Okay. Page 42. Okay. Okay. Now, I don't expect you to understand each of the reconciliation items, but I just want you to believe me that there is a reconciliation which occurs between the fund statement and the governmental activity, right? But notice for the time being, just briefly review things like what is that caused by? Looks like long-term liabilities, right? That's the difference, right? Looks like things which have to do with capital assets, okay? In this case, it's mostly long-term liabilities, and we'll go through this. But do you see the general categories, capital assets and long-term liabilities? So there's that reconciliation that occurs. So we saw the two governmental fund financial statements. Let's take a look at the proprietary fund financial statements. And these are the ones you love because no sweat. This is the stuff that you are used to. And we'll go now to page 45. Okay, all right. Again, notice the name of the statement, statement of net assets or statement of net position. Now, these are called what? Enterprise funds. So I didn't tell you this, but proprietary funds are in two categories. You have enterprise funds and internal service funds. Okay? These are what? The enterprise funds, and I'll go through that now, as we go through this. Solid waste disposal, apparently they probably run a landfill, okay? And there is a field here, arena that they probably rent, and non-major enterprise funds. Notice they also use funds here, like a funds concept of dealing with it. And then they add it. Notice the internal service fund, even though it's shown here, it's not reflected in the total. I want you to just remember that, okay? It's shown here, but it's not. And we'll come to that, and I'll explain to you. Anything unusual about the balance sheet? I'm sorry, I didn't go to the next page yet. Hold on. Yeah, that's what I'm getting to. I didn't show you the next page. Okay? Here. These are the net assets. Okay? It looks like in government, things seem restricted, unrestricted. Set up for a certain purpose, the fund activity. Doesn't that seem, because the other one has the same thing. Either it's restricted for some purpose. Why do they have that in government? Why do they take their fund equity and show it in those components? That's it, you got it. Because remember, if you're a taxpayer and you saw all that money sitting there, what are you going to say? Lower my taxes. What is it for? So what governments do is they squirrel away the money for either debt service repayment or for some purpose or as a rainy day fund. Okay, so that's, and we'll talk about that more. But here, as you can see, this is the bottom line. You know what? No reconciliation between this and anything else is not required, because when you looked at that statement of net position for the entire operation, the number is exactly the same. We don't need to reconcile this. Why? Because it's the same basis of accounting. You can trace this number right to the statement of net assets in the other statement. So we have that, and as I said, I'm throwing a few statements at you on, with this, but now I'll go into the operating statement, the so-called income statement. Just don't call it income statement. Okay. This one is on page 47. Okay. Look at again, just concentrate on the format of the statement. Don't worry about the individual line items. First of all, not income statement, statement of revenue, expenses, and changes in fund net assets. The other statement was called what? Statement of revenue and expenditures and changes in fund balance. This one is statement of revenue and expenses. Full accrual basis. Notice other things. Operating revenue, and on top of this, they also have a category as non-operating. This is for other items which might support the activity. So again, operating, operating items, and then non-operating items, and any other items, in this case transfers in and out. Again, each of these that I'm showing you, we can spend a whole chapter, so that's why we're going to go through it, but don't be concerned. Right now, I just want to introduce you to the statements themselves. Okay, now we come to the fiduciary fund financial statement. This is also no stress, because you know what? It's just like you would do it for business entities. But there's something interesting about fiduciary statements, and let's take a look at those. Okay, and they are on starting on page 50, and I'm going to go to those. Okay. Now, when we discuss fiduciary funds, what you'll see is there are a couple of types of fiduciary funds. There's one which is missing, but we'll deal with that. One is the pension trust fund, private trust fund, and then the agency fund. And we'll talk about what each one of them are. Okay? Notice one thing, you have your assets, you have your assets, you have your liabilities, and you have this column, net assets held in trust. Okay, this is what's due to those who have ownership on these assets themselves. Okay. The other thing you'll notice is very few capital assets. What do trust funds usually have in them? Mostly investments, bonds, stocks. You won't see much in terms of hard capital assets. Okay, that's one of the things that you'll notice. Okay. The other thing you notice is go to the last column, agency funds, and you go down, you see the assets, you see the liabilities. What's here? Nothing. Agency funds are a student's dream because there's nothing to do. Asset equal liability. There's no income statement, there's nothing. And I'll talk to you what those agency funds are all about. And I think we introduced that earlier. Because you know why? If you have only assets and liabilities, you prepare an operating statement to show the change in net assets. And if there's no net asset, why do you have to do it? Everything that you do either increases or decreases the asset or increases or decreases the liability. Okay? So, and if you really want to see that, notice instead of calling it the income statement of revenue and expenses, this statement is called statement of changes in fiduciary net assets. In your mind, and I hate to say this because I don't like to throw these terms out, just think of this as the operating statement, which is like your income statement. What? Just think of it. Okay? Notice that a column missing. What's that column missing? Because there is none, right? So you have pension trust fund and private source of trust. And notice no revenue, addition, and hold on. Let me take it down a little bit. And deduction. No revenues, no expenses, addition, and deduction. Full accrual basis. No funny business. It's just exactly as you would do in, and for these it's very important because, can you imagine doing pension funds and dealing with large-scale investment trust funds if you use a different basis of accounting? That would not work too well. So those, as an introduction, are the financial statements. Those are all the financial statements you would find in a governmental entity. Keeping it very simple, just financial statements. Okay? So let's just do a quick review. And I think I talked to you about this before, which, what is a fund? We talked about this self-balancing set of accounts, has own resources, liabilities, and I don't know if you know, could have its own general ledger. What does that mean? Well, what it means is, think of a fund like a small company. Each one of those, and you consolidate them all together, right, at the end. And I don't mean to use this in a loose way, but that's what basically you have. Each fund is has its own self-balancing book. Okay? Now we'll go into further detail on the types of funds. Okay? The governmental funds, there are 5 in number, and that's what we'll be discussing in the next few weeks. There's the general fund, which is the operating fund, right? There's the special revenue fund. There's the capital project fund, the debt service fund, and something called permanent fund. So we'll go through each one of these. Obviously, you only have one general fund for government. Sometimes it's called current fund. This is where all those activities, this is where they reside. And general fund also tends to be the financier of all the other activities. When the debt service fund needs money, the general fund sends money. When the capital projects fund needs money, they send it money. When the proprietary fund, the business activity, needs capital to start off, they receive money from them. So general fund is like is the one which supplies those resources. So what are special revenue funds? Now, special revenue funds, as it says, are those which have a certain purpose. Now, what could that purpose be? Anyone give me an example? What could be a purpose? Why you might, yes. Yeah, some states, what they do is, and it's a good point, because in New Jersey it's very important, because in New Jersey, the gasoline tax that's levied when you pay every gallon of fuel you buy, there's a gasoline tax, right? that gasoline tax is dedicated for highways and roads. So this would be where a specific source of revenue is dedicated to a certain purpose, be it gasoline tax, be it some other levy, where that number is then put towards that use itself, okay? And we'll take a look at it. The good thing about the special revenue fund is the accounting is just like the general fund. Main basis of accounting, things still, pretty manageable, but it's for a specific purpose. Remember, general fund is what? For overall governmental office. Special revenue fund is for a specific purpose. Okay. Debt service. What happens in government is when people lend money to government. So if I decided to, as the CFO of a government organization, borrow money, so I go to the investment bank or some outfit and they say, okay, we'll be prepared to lend you money. So, I want to borrow $10 million. And I want level debt service of over 20 years of $500,000. Level debt service. It's the same every year. They say, all right, we'll lend you the money, but you know what we want you to do? We want you to borrow $10.5 million. Making it very simple. And that $500,000, we want you to put it into a debt service fund. So the first installment that's due, you will make that installment. It's going to. And then, as soon as you make that installment, we want you to put another $500,000 right away. So they always want to make sure that you have money in the bank to pay them back. Now, this is, as I said, this is kind of an extreme example, but usually the purpose of the debt service fund is for governments to segregate resources to pay debt off. Now, some of you might think, you know what? This is still what? A governmental fund. It does not carry the long-term debt on the books. You won't see notes payable. You won't see any of that. All this is a place to park your money. Money comes in. When it's time to pay, you pay, and it's over. And this thing keeps on going. And remember the financial statements we saw before had different debt service funds? Well, some areas, some lenders might require their own debt service fund. So that's why you can have multiple debt service funds. Yeah. No, I'm saying over a 20-year period. I gave you an example, a quick example. Somebody lent you $10 million and said, but you need to borrow 10 and a half.
But I just
yeah.
But how do you put it that it's a long-term liability because there are no long-term liabilities?
No, but see, just because you can't record them on your books on the governmental side doesn't mean you don't have them. You still have them. It's just that they don't show up there. Okay? They show in the governmental white paper. Yeah. Okay? So, capital projects fund. Now, this is exactly what it says. Okay? Financial resources segregated to pay for purchase or construction of a long-lived general capital asset. You're constructing a huge facility. It costs millions and millions of dollars. Well, somebody had the bright idea saying, don't mix it up with the rest of the government operation. Set up a separate fund. So what typically happens is what happens. The government goes borrow, let's say, $20 million for this project, gets the money, gives it to what? The capital project fund. And from there, the monies are dispersed for construction. The interesting thing again about this is, this fund does not carry the asset. When the asset is done, the capital project account is closed. Done. Over with. Most people think, oh, this is where they probably carry the building. No. Because this is a governmental fund. Okay? So again, we'll spend a whole lecture on this. Okay? The what? Yeah, yeah, good point. Yeah, if you have more than one construction project where you want to keep track of each one of them, as he said, you would have multiple capital projects. Now you have, this is not really, you don't see this too much, permanent fund. But it does happen in government. You got somebody who's really rich, lives in the town, loves the library, or the music, orchestra, and says, you know what, when I'm dead, I want to give $1 million from my estate to the town, and whatever the interest or earnings are, use it for the kids or the library or the orchestra, okay? And some people get confused between this and fiduciary. See how similar they seem? My advice to you is stick with the definition. This is one where the principle is not spendable and it's used for a public purpose. Okay? So, now of course somebody can say, hey, pension trust funds, well, they're not exactly public purpose. Investment trust funds are not exactly public. But I have seen confusion between these two. You do see that, okay? So that's the permanent fund. So how many funds did we have so far in the governmental funds? 5. Okay, so this is, we talked about this, common characteristics. Again, I keep on harping over this over and over again. The distinction between expenditure and expenses, I think you know that by now. And the important fact that capital assets and long-term liabilities are not recorded in governmental funds. Okay, so two reconciliations between two sets of financial statements, right? Balance sheet to statement of net position and statement of revenue and expenditures to statement of activity, and the two reconciliations. These are things that you should be aware of. Two reconciliations for two separate set of statements. Think about two balance sheets on two different bases and two operating statements on two different bases, and the reconciliation between the two. So that's what that is. All right, now what we'll do is we'll deal with, this is our first journal entry, okay? Very simple journal entry. And what I'd like you to do is, when you read a transaction, you have to dissect the transaction. First, the city issues a note, right? Which is what? To get money into the city, right? And then what does it do? It purchases the building. Now, there's two ways to answer this question. Combine it all in one, or keep it separate. My advice to you at the beginning, keep it separate. Okay? Make things a lot easier. All right? And nothing crazy, except for the fact you've never seen this account. Other financing sources. All right? So let me explain to you, and this is when we jump ahead a little bit. I don't know if you've noticed, when you're looking at the statement of revenue and expenditures in government, there were revenues, there were expenditures, and there was a little section at the bottom which said other financing sources and uses. You said, what in the world is that? What's this other financing source and use? Well, it's important to distinguish. If you're recognizing all the money that comes in, almost as if you're recognizing revenue, you want to make sure at least that you find out what's real revenue from what's not real revenue. It's all money coming in anyway. You want to make sure that you know the distinction. So what happened was, what they did was, if it's revenue like fines and charges for services, those are real revenue. But if it's money being received by you issuing bonds, don't show that as charges for services or something like that. Call it other financing sources. So let me ask you a quick question. What could be the opposite of this? Sources, right? This is source, money coming in. And it's a credit balance, meaning what? It's a revenue item, okay? How about other financing use? You're close. Other financing use. So if this is money coming in from borrowing, what would that be? Money being paid to settle this liability, right? When you make the payment, that's where that would go. Okay? So everybody understand this journal entry? Now this is the journal entry under the basis we know. This you'll have no problem, right? This. The difference between the two, in the first case, it went into the income statement. You shouldn't use the word income statement. It's what? Statement of revenue, expenditure, and changes in fund balance. Does this go into the statement of revenue and expenditure? No. This is a real liability. Notice the difference between the two. Okay. Now we are ready to spend money. Notice this. This is a very interesting title. Expenditures capital outlay. Whoever came up with that? On the one side, you're saying it's like an expense, and then you put capital in front of it. Which one is it? Well, it's an expenditure. But why they've put the word capital outlay is to distinguish that from the regular operating cost. Okay? So if somebody reads the statement, they know that this was for a capital item. Notice, under the general fund, notice, this is not an asset. Very strange. Again, not an asset. But as soon as I turn to the other basis of accounting, what happens? It becomes an asset under government-wide. So what's the bottom line? The bottom line is, in your head, you got to keep two sets of books. One under a fund basis or modified accrual basis, and the other under full accrual basis. So every journal entry you make, you have to make two. Now let me do that. Most of the journal entries you make, you'll make two. Obviously, you're not going to make two entries if you're paying off a receivable. What difference does it make, right? It's the same thing, right? Paying off a receivable. But in this case, where it does make a difference, you need to have those two bases of accounting, always. The government-wide basis and that. Now, I have to tell you before we take our quick break, in practice, in the real world, we don't do this. No, we don't do it. People will go crazy. You would have chaos. What we do is the following. And I'm not saying this is from my years of experience. And this is the best we found out, that we've discovered on dealing with it. We record everything on an accrual basis, just like a business. Everything. And at the end of the year, we devise the system, a computer system, and actually it's no rocket science. We take the balances and we convert them to a modified accrual. Or the other way around. Some people feel better with the modified accrual basis and then turn it into that at the end of the year. But for the time being, just remember, there is no accounting software, I shouldn't say that, I'm sure there's something out there, where you have to make two journal entries for every transaction. Could you imagine trying to do that? So it does not really work that way in the real world. So let's take a quick 5-minute break, and then we'll come back, and we'll turn the recorder off.